decode these big bank numbers, we have with us Aditya Shah, founder Hercules Advisors. Aditya, welcome to the show. I want to understand from you, both the banks have more or less maintained in line with expectation kind of a numbers. But first ICICI Bank, 18% PAT growth, 4.1% NIMs. How do you see the numbers?
Superb numbers from ICICI Bank, even though the loan growth is tad bit lower, but I'm happy with that because the company had said this, that they will pull back on loan growth if they see a high number of NPAs coming in. So happy with the pullback in the loan growth. The deposit growth is really very strong. And one of the things that is leading to this resurgence from ICICI Bank is the stable asset quality and improvement in the asset quality. So then it truly means that ICICI Bank has taken over from HDFC Bank as the market leader, as HDFC Bank battles through the problems of the merger. So superb results from ICICI Bank, pristine asset quality, thumbs up to the result.
Right. When we heard management commentary also, what we could make out was that going forward, there will be some pressure on margins, but nevertheless, they have been over 4.1%. Do you think this will be a recurring problem?
So margins for ICICI Bank have always hovered between 3.8 to 4%. This is a temporary expansion in the margins. However, this will not be permanent. I expect the margin to hover close to 4%.
Right. Coming to HDFC Bank, now advances and deposits growth has been in line with expectations, but deposits have been growing over 14% now. Do you think that will be some kind of a relief compared to what has been the industry trend?
So HDFC Bank, the deposit growth is very strong. The company has cut back on the loan growth because it wanted to control the LDR, the liquidity deposit, the loan to deposit ratio. Now that has come below 100%. So over a period of next 3 to 4 quarters, the bank will now continue to accelerate the loan growth. However, the most disappointing part of the result is there has not been a market improvement in the margin. When the market anticipates a market improvement in the margin from about 3.43 or 3.46% to about 4%, that is when the stock price will show real movement. For the time being, the results are really very stable, but the bank needs to really work hard on improving the net interest margin. And bank has taken right steps in improving the net interest margin by paying off the borrowings of HDFC, by raising some deposits at a pace faster than the system, and slowing down the loan growth. So all ingredients are in place. So over the period of next 3 to 4 quarters, the bank should start to improve its margin.
Aditya, there is one more bank which declared earnings today, and that was Yes Bank. You would have seen their loan growth has been in single digits, which is come what may. You would be surprised to see that it is below the industry average. How do you make out of the business which is happening at Yes Bank, and particularly the loan growth part? Do you think it is somehow disappointing? Although the management has been maintaining that if you see the next year, it will be more than 12%.
So for Yes Bank, it is in a reconstruction phase after whatever fiasco had happened on Yes Bank. The asset quality continues to remain very stable, and that's the one of the most important aspects of a banking result. The loan growth can pick up over a period of time. At a time when system is experiencing some sort of NPAs in many sectors, I believe that the management is right in pulling back on the loan growth per se. So I'm not too much worried on loan growth. The asset quality part is very stable with Yes Bank. So not too much disappointed with the results from Yes Bank.
Overall, you see ICICI Bank and HDFC Bank because it is the first few banks which have declared numbers. How do you see the reaction of market when it opens on Monday?
So from my perspective, market would be really very happy. There should not be any sudden positive reaction to ICICI Bank. These numbers was already built in. I will be a tad bit disappointed with HDFC Bank considering the NIM improvement is not happening at a faster pace. However, for both those results, I don't think there will be any positive or negative reaction. Both these results are really very stable with no surprises either side for both the banks.
Right. If you would have seen the PPOP for HDFC Bank has declined 9%. What has been the reason? Were you able to decipher the numbers?
So what has happened is HDFC Bank has cut down on loan growth. So when the loan growth is cut down, the net interest income will come down. Once the net interest income will come down, obviously the PPOP will also come down. So from that perspective, I'm not too much worried about the PPOP because the bank is working on bringing down the loan to deposit ratio below 100%, and bank has already guided that at least for this year, loan growth would remain very muted. So from that perspective, not too much worried on the fall and the PPOP.
Right. Similarly, if you see the provisioning front, HDFC Bank, it has been more or less stable if you talk about QOQ numbers, but YOY it is declined 76%. Do you think that is some kind of a comfort going forward?
So asset quality is never a problem for HDFC Bank. This quarter, the credit cost is at 0.43%, which is really very good. So not too much worried. As I said, for HDFC Bank, none of the parameters are problem. The only big parameter which will move the stock is the net interest margin. Once the net interest margin starts to move up from 3.43% to 3.5, 3.6, and eventually back to 4%, that is where the stock price movement really is. NPAs were never a concern for HDFC Bank, and this quarter's slippages are also not a concern. It's very, very stable.
Right. If coming back to ICICI Bank, 14% loan growth, around 14% is the deposit growth, around 13% is the loan growth. Do you think that kind of momentum can continue for banks despite there will be margin pressure which may come in after repo rate cut?
Definitely, I think the cut down on interest rates for savings should help both these banks. Both of these banks have cut in the last 1 month the interest they pay on the savings account. Also, the loan growth, I believe ICICI Bank would be in the range of 10 to 15%. ICICI Bank has taken an approach that they will not chase loan growth at the expense of NPAs, at the expense of non-performing assets, which is a great strategy. From a loan growth perspective, I don't feel ICICI Bank has a problem. They will do really well from here on, so not a concern that.
Similarly, on the margins front also, do you think that 4.1% is the current number and they have maintained between 3.8 to 4% kind of a guidance, although they do not give a specific number-wise guidance, but do you think that this kind of range, which is still on a higher side if you compare it with the industry, will continue for ICICI Bank?
So 3.8 to 4% is the industry standard, where most of net interest margin for top banks should settle down. Before HDFC Bank took its merger, HDFC Bank also used to do about 4% of net interest margin. So from that perspective, 4% is a sustainable margin, 3.8 to 4%, and I think ICICI Bank will come down, but it hardly matters given 10 to 15 basis points. The point being that 4% is the range where it is sustainable for the bank.
If we see all three numbers, Yes Bank, ICICI Bank and HDFC Bank, what do you think are the tick marks which could make markets happy, and where do you think are the misses?
So for ICICI Bank, there are all tick marks. There's no surprise anywhere. Really very happy with the results. Double tick mark to the asset quality. The asset quality continues to remain very strong. Let's come to HDFC Bank. The only disappointment will be with the net interest margin. The improvement is taking far longer than expected. However, that HDFC Bank also ticks all the margin, all the boxes, and asset quality continues to remain strong. That also is a market moving factor per se. So from my perspective on both these banks, I don't think that the market has not priced in any of these things. You can check the stock price of HDFC Bank. It has already moved by about 10 to 15% over the last 1 month. So from my perspective, all of this is priced into the stock. Nothing that is really very surprising. On to Yes Bank. Yes Bank is making slow and steady recovery, and Yes Bank's asset quality remains very strong. That is really very good. Now management guidance of about 12% loan growth next year also bodes well. So I'll be very careful on Yes Bank for now, but HDFC Bank and ICICI Bank continue to remain top picks.
Thank you so much, Adit, for putting everything into perspective. So all three banks have reported earnings today. While on margins front, some of the banks do expect that there will be some pressure due to repo rate cut, which is anticipated in the year forward. But for now, ICICI Bank, HDFC Bank has been delivering promising loan growth, and even on the deposit growth front, both the banks have delivered, but all depends on that how are other banks performing. That will be keenly watched. But as Adit was mentioning, there are tick marks which are there for HDFC Bank, but margins is something which market may tend to worry about.